Good morning, ladies and gentlemen. I want to welcome everybody to FXTM's week ahead market themes to watch out for. So before we move forward, I want to confirm if everybody's able to hear me clearly. Okay, perfect. Thank you. So what we are going to discuss today, we're going to have a review of the markets last week. Last week was very interesting and I want us to break it all down. We're going to speak about the key themes to look out for in the week ahead. Finally, we're going to have a technical breakdown of the economic calendar. And finally, we're going to discuss the technical and fundamental setups for us to look for this week and the new months coming ahead. Finally, we'll conclude with a question and answering session. So last week was certainly interesting for the financial and currency markets. The main thing that we saw was the dollar slide into a fresh 3-year low amid fears of a trade war. So the dollar tumbled to its lowest level in over 3 years, below 89, after US Treasury Secretary Mnuchin commented about the benefits of a weaker dollar. According to Mnuchin, a weak dollar is good for American trade, and such comments simply sparked fears of a potential currency war. I believe there's a lot of uncertainty around his comments because thinking about how IMF Lagarde urged him to clarify his remarks continues to state this. Even though US President Donald Trump commented on Friday and said that he expects the dollar to get stronger and stronger, this did little to quell the impacts of Mnuchin's statement. Hence, we saw the dollar ending last week heavily depressed. Looking at the euro rallied after the hawkish ECB meeting. So on Thursday, Mario Draghi stated that the economic data indicated that solid and broad growth. He also expressed optimism over inflation potentially rising higher in the short to medium term. Although there were some concerns in the meeting over, uncertainty, exchange rate uncertainty, which required some monitoring, I believe the overall ECB meeting was quite hawkish. Hence, we saw the euro punch above 125. Last week, we also had GDP from the UK and US. In the UK, unexpectedly, GDP beat expectations by rising 0.5%. I found this quite interesting because with the UK, we have ongoing concerns about high inflation, and tepid wage growth, sapping consumer spending power. And of course, if consumers are not spending, this will impact consumption, and consumption is a key driver of economic growth. So for UK GDP to hit 0.5% in the final quarter of Q4, provided a boost for the sterling. In the US, economic growth actually failed to hit expectations. It came at 2.6, hence we saw further dollar weakness. Looking at gold remains heavily supported by a vulnerable US dollar. Last week we saw gold punch above 1,365, levels not seen since July 2016, all because of dollar weakness. If the dollar continues to weaken moving forward, we can see gold trade higher. And finally, let's talk about Bitcoin. Bitcoin was heavily pressured by regulation fears. So especially in Davos, we had threats by financial heavyweights on cryptocurrency regulations. At the same time, there were reports of a massive exchange in Japan halting clients' withdrawals. All these things have actually soured investor appetite towards Bitcoin and other cryptocurrencies. This is why we're seeing prices trade lower. Does anybody have any questions before we move ahead? Okay. So the key things for us to look out for in the week ahead. Well, I expect the dollar to continue weakening further. The anxiety of a potential currency war is likely to continue denting buying sentiment towards the dollar. We have the FOMC statement this week, also the NFP on Friday. With the NFP, we expect the NFP to be status quo in the sense that we're looking for monetary policy to remain unchanged. But any further hints of the Federal Reserve potentially raising US interest rates in March could offer some support to the dollar. Looking at NFP for December was disappointing. So investors will be paying close attention to see if NFP in January does exceed market estimates. A strong NFP is likely to offer some support to the dollar. In regards to the sterling may continue benefiting from a soft dollar and soft Brexit hopes. So a soft dollar, as long as the dollar continues to weaken, we can see the pound US dollar continue to elevate to higher levels. And if soft Brexit hopes continue, if investors are continuing to expect that the outcome of the Brexit is soft, this continues to also supporting the pound US dollar. Gold bulls are likely to remain in the vicinity. So we have a situation where there's a risk on sentiment that's continuing to support global stocks, but naturally in a risk-on environment, this is likely to sour appetite for safe haven investments such as gold and the yen. But in this situation, we can see gold supported solely based on dollar weakness. And finally, looking at Bitcoin and cryptocurrencies, the regulation fears are likely to continue to enforce downside pressures on cryptocurrencies this week. Does anybody have any questions before we move on to the economic calendar? So let me just recap again. The four themes we're looking for this week is dollar weakness ahead of the FOMC statement NFP. We're looking for the sterling to continue benefiting from a soft dollar and soft Brexit hopes. Gold to refine support from dollar weakness. And finally, looking at cryptocurrencies to continue to remain pressured by the regulation fears. So now let's have a breakdown of the economic calendar this week. So Monday is relatively quiet. On Tuesday, we've got CB consumer confidence for the dollar at 3 p.m. Then we have BOE Carney speaking at 3:30 p.m., which could inject some volatility into the sterling. On Wednesday, we have the CPI at 12:30 a.m. for the Australian US dollar. At 2 a.m., President US Donald Trump will deliver his first State of Union address to Congress. We have ADP NFP at 1:15 p.m., which will be very important for the dollar. At the same time, at 1:30 p.m., we have GDP in Canada. At 3:30 p.m. on Wednesday, we have crude oil inventories. Finally, at 7 p.m., we have the all-important FOMC statement and rate decision, which will likely play a key role in where the dollar concludes this week. On Thursday at 9:30 a.m., we have manufacturing PMI for GDP for the UK. At 3 p.m., we have ISM manufacturing for the dollar. Finally, on Friday at 9:30 a.m., we have construction PMI for the UK. And finally, at 1:30 p.m., we have the all-important non-farm payroll change, which will be very important for the dollar. So as we can see, this is a very, very important week with today relatively quiet. A lot of the action will be on Tuesday, Wednesday, Thursday, and of course Friday. So now we've covered the calendar, let's take a look at the fundamental setups. Moving forward, I expect the euro dollar to remain supported by QE taper expectations and ongoing dollar weakness. Last week's hawkish ECB meeting is likely to renew or fuel market expectations of QE potentially coming to an end before before the end of this year. We're looking for the pound US dollar to remain buoyed by soft Brexit hopes and a vulnerable dollar. The dollar yen to continue to be dictated solely on the dollar's performance. And finally, looking at dollar CAD, the bias is actually starting to look tilted to further downside. So now we've covered the fundamental setups, let me share my charts. So remember last week we were speaking about the dollar index's performance in a weekly time frame. The dollar index is heavily bearish. There have been consistently lower lows and lower highs. Taking a look at the lagging indicators on a weekly time frame, we can see that prices are trading below the 20 simple moving average, and the MACD is also crossed to the downside. Taking a closer look, the sharp weekly close below the 90 level should encourage a further decline towards the 88 support. If bears are able to enforce further downside this week and we experience a strong weekly close below 88, the next level of interest I'm looking at would be around 87. Last week we were speaking about the euro dollar and the monthly charts. It's very interesting to actually see that the monthly target that we spoke about at the start of the month has already been reached. Fundamentally, we know that the main driver behind the euro dollar's upside, it's firstly the bullish sentiment towards the European economy, market expectations of the European Central Bank tapering QE or QE concluding before year end, and ongoing dollar weakness. So these things have actually supported the euro dollar and has actually hit to our target. If the upside continues, the next level of interest I'm looking for the euro dollar in February in the near term should be 125. The pound US dollar has also hit the target that we spoke about at the start of the month at 14230. As we said, we've been repeating the two drivers or the two key fundamental factors behind the pound US dollar's upside is a soft dollar and market expectations or market hopes of a soft Brexit. If these two themes hold and we experience a weekly close, a monthly close above the 1230 level, the pound US dollar has further upside potential towards 143 and 145 respectively. The dollar yen. At the start of the month as well, we're speaking about the dollar yen being solely dictated on the dollar's performance. Ongoing dollar weakness has actually taken the dollar yen to a monthly target at 108. We can actually see there's a bear monthly trend in play on the dollar yen, and a strong monthly close below the 108 is likely to open a further decline towards 106 and 105 respectively. At the start of the month as well, we're speaking about how important the 0.80 level, resistance level on the Australian dollar is. Interestingly, prices are trading above this level, and if you can secure a monthly close, the next key level of interest on the Australian US dollar will be 0.83. Now, taking a closer look at the Australian US dollar, fundamentally the Australian US dollar, the Aussie itself is bearish based on the macroeconomic conditions in Australia, but a driver which continues to support the Aussie may be rising gold prices. When you factor this with a weakening dollar, we can actually see why the Australian US dollar is starting to look increasingly bullish on the monthly charts. So going back to what I said, if we can secure a solid monthly close above the 0.80 psychological resistance level, the next key level will be 0.83. For those who are trading crude oil has been heavily supported on the weekly and monthly charts. We can actually see crude oil is respecting a weekly bullish chart, weekly bullish channel. So the drivers behind crude oil's impressive appreciation, number one, of course, is optimism over OPEC supply cuts, rebalancing markets, and number two, ongoing dollar weakness. While further upside could be on the cards short term with 67.50, the first important level of interest on the WTI crude, I still believe that a threat to higher oil prices is rising production from US shale, and investors should keep this close in mind. Rising production from US shale could easily put an end to this bullish uptrend, with bears potentially eyeing 62. Going back to those who are trading the euro dollar, we've spoken about the euro dollar on the monthly charts right here, as how it's hit the 12440 monthly target. On the weekly now, this is still heavily bullish. There have been consistently higher highs and higher lows, and prices are trading above the moving 20 and 50 simple moving average, and the MACD is also crossed to the upside. I can actually see consolidation potential in play right now on the euro dollar. Looking at the levels, I've already marked 125 as a first barrier, first level of resistance, and 1237 acting as a support level. So there's two scenarios that could happen. The upside momentum could take the euro dollar towards 125 and potentially higher, or we could see a situation where the euro dollar declines back below 1237. If such a situation happens, this could be a start of a technical correction with the euro dollar trading towards the 121 level, which could eventually transform to a new higher low, which may open a path to further upside back to 1237, 124, and 1250 respectively. For those who are looking at gold on the weekly charts, as I said earlier, fundamentally, the main fundamental driver behind gold's appreciation has been dollar weakness. So as long as the dollar continues to weaken, gold should remain supported. We had a weekly close above the 1,300 level, and the next level of interest on gold I'm looking at should be 1,360 and 1,375 respectively. And finally, taking a look at the pound US dollar on the daily charts. For those who trade the pound US dollar on a daily time frame, the pound US dollar remains bullish. Right now, I can see a potential consolidation in play. We saw the pound US dollar jump to the highs of 1435 regions last week. A technical correction could be in play with the psychological 140 level acting as a potential support. If this could be the case, bulls may exploit this new support to elevate the pound US dollar higher towards 141,750 this week. Alternatively, though, if the 140 support fails to hold, the pound US dollar could venture back towards 13850. Now, this is a naked chart of the euro dollar. Taking a look at candlestick formations, we can actually see that the euro dollar on the daily continues to fulfill the prerequisites of a bullish trend, hence the higher highs, the consistently higher highs and higher lows. If I start to draw a bullish trend, we can actually see that the euro dollar is in the process of following a bullish trend. Taking a look at the key levels of interest, if I start to animate the charts with moving averages, so now we have a clearer picture. With the consistently higher highs and lows, prices are trading above the 20 and 50 simple moving average. Right now, taking a closer look, we can actually see a potential higher low around here. So the potential higher low around 12175 is around, it's a hefty 260 pips away. So it could be fair to say that as long as the euro dollar can keep above this new higher low, bulls remain supported. What I'm looking for in this week, especially with this candlestick formation right here, this shooting star candlestick formation, is if the technicals play, we could potentially see a technical correction on the euro dollar, which could create a fresh higher low before prices are elevated higher. Of course, even though technically the euro dollar is bullish, the fundamentals, of course, will play a part in this setup. As I said, today, the economic calendar is relatively quiet, so price action will actually dictate where the euro dollar trades. But we have the FOMC statement this week, which will heavily impact the dollar. We have the NFP also, which will heavily impact the dollar. And of course, these two key events, on top of Trump's speech tomorrow, will play a role in where the euro dollar concludes this week. But technically, this is bullish with further upside on the cards. This is a bear chart on the dollar CAD on a monthly time frame. Taking a look closer on the dollar CAD, we can see the dollar CAD is starting to turn bearish on the monthly charts. Although in the past they've been consistently higher highs and higher lows, this was put to an end. This was put to an end when prices broke below the 1,300 psychological support regions. It's very interesting because right now we could actually see the situation where previous support has transformed into a dynamic resistance, which should pave the way to further downside. Fundamentally, with the dollar set to weaken further amid ongoing concerns of a potential currency war and a political risk in the United States, this is likely to drive the dollar CAD lower. Taking a closer look at the dollar CAD on the weekly charts, with the trajectory slowly pointing to the downside, we're looking for the first level of interest on the dollar CAD around the 121 regions. Because if we are able to secure a solid weekly close below the 121 regions, naturally this should open our path to the next level of interest at 1.191. For those who want to trade the dollar CAD on the daily, of course, the daily fulfills the prerequisites of a bearish trend because we can see the consistently lower lows and lower highs. The 1235 has actually started to act as a pivotal point, so it could be fair to say that investors should pay a closer look at how prices react around the 1235 regions. If bears are able to keep below this level, the dollar CAD may continue to follow this downside trajectory towards 121, but the first checkpoint could be around 122. Alternatively, though, if we have a situation where the dollar CAD breaks above the 1235 level, the next key level of interest would be where the previous lower high was, around 125. As I said, this would be a very volatile trading week for the dollar, and of course such is likely to impact the dollar CAD's performance. So we have a question from John, speaking about the breakout levels on the euro dollar and the pound US dollar. So if I recap to what was said earlier, right now of course, because today the economic calendar is relatively light, it's price action that will dictate whether euro dollar trades. We know that the euro dollar is looking bullish in the daily charts, but the shooting star formation last week, the rejection that we saw, does suggest that the euro dollar could be starting a technical correction before elevating higher. Right now, the bulls remain in firm control above the 1215, 1216 lower high, and a new lower high seems to be potentially in creation around the 1228, 1227. Once we've seen support around here, bulls may be inspired with enough inspiration to elevate the euro dollar higher. If you want to play with the breakout though, a decisive breakout above the 125 psychological resistance level could pave a way to further upside. And looking back with the pound US dollar, as I said earlier, a technical correction seems to be in play with the first level of interest around 1.40. With the breakout as well, if the technical correction does not occur and we simply have a breakout, I'm looking for a breakout above 1425. Okay, guys, we have another question from James about the outlook for gold. So let me recap once more. So with gold as well, as I said, we have a situation where we have a risk-on situation where investors are seeking risk via higher stock markets, but safe haven investments such as gold and yen should be impacted by the risk-on environment. This this clarifies that the main driver behind gold's sharp appreciation has been ongoing dollar weakness, and as long as gold continues to weaken, as long as the dollar continues to weaken, we can see gold to remain supported. Right now, we can see the strong resistance around 1,360 on the weekly charts. If prices fail to break above this level, a technical correction could be in play with the first level of interest at 1,340. If we see a breakdown below 1,340, gold could test the 133, 1328. Alternatively, though, a strong breakout above 1,360 could open a path to 1,375. Okay, ladies and gentlemen, I want to thank you all again for attending the FXTM's Week Ahead webinar. If you missed the first parts and you have questions, be free to look at the post-recorded version of my FXTM. Also, please check out the market updates, which are every Tuesdays and Thursdays. And if you have more questions on the markets, please look at the website for more live market commentaries and market reports from market analysts. Thank you all again, and I'll see you all next week.